Good afternoon, everyone. Hey, this is Bruce Marshall with Simpler Trading, doing the nightly video update for Wednesday, October the 2nd. And man, what a month that has been already. This is only October 2nd, and we have already had a huge smackdown in the last 2 days. If you have not been watching the market, you missed a 100-point drop from yesterday. So 29.92, this is SPX. 29.92 down to 28.74. More than 100 points in 2 trading sessions. So pretty brutal. And the reason the sell-off started right there with ISM manufacturing data that came out weak and was the weakest it's been in a decade, which sparks recession fears. And we've already got global growth fears and all of that going on, and this tends to add to it. The potential tends to add to it because the economy is the U.S. economy is the strongest, around all the world markets. So is this something to be worried about? And it's still too early to tell. A lot of the problems have been from layoffs and strikes and that type thing, and primarily with the trade war going on with China and tariffs and so forth, have really hurt manufacturing in the short run. Now this is a short run deal, so I think that the trend has been weak as this has unfolded. But we might look back and say, this is kind of an anomaly or something like that. I don't know. It's way too early to tell. But what we do know is that we're down here at this 28.74 level, so we need to try to figure out what to do with that. And again, you guys know I like trading the SPX, so we'll take a look at this on a larger time frame. And if we go to let's just go out here to our yearly chart. And on a 1-year chart here, we can see that we're coming back down into some kind of iffy levels for sure. Down here, there's a 200-day. Never good to get back into that region on the indexes, at least. It's just not a good sign. Of course, we've got, again, all of the tariff concerns and all that kind of stuff. But at the same time, China and the U.S. are coming back together next week for negotiations on tariff talks. So we could get positive news at any moment next week, I would say, at any moment, any time. And we know we're in a highly news-driven, sensitive market. Also, we know that the Fed is, kind of has our back at this point and is looking to do another rate cut as well. Now, what we have in the immediate future is payrolls coming up on Friday. And we had ADP report, looked like weak job market, which actually is kind of counterintuitive because that's actually encourages the Fed to maybe cut sooner, right? So we won't know how how this can turn out until Friday morning. But either way, we're kind of in limbo out here. And let me show you, let's put on our voodoo lines here and see what we got. And we'll show you some different levels. And this is what we really, need to be thinking about here. If you notice the white lines there, that is voodoo snow line down there at 28.30, 28.29.44, but 28.30 right here. Sorry, those white ones are I have removed them and I'm trying to add them back on here. But we have a level right there that we've hit 3 times in a row, and it held. And as you can see, we're coming kind of back down into it right now. Though that's still 40 points from from where we are, 40, 50 points from kind of where we've been today to the downside. So we are absolutely still vulnerable to the downside. That being said, we can have, and let me zoom in here, the thing to be very careful about is that when we have these sharp sell-offs like this, you guys remember when this one happened, we can have a big rip higher even in a downtrend, So you see we're kind of sitting on that skyline, that light blue skyline. We could rip higher here, at any point, and as it did over here, it failed, and then we rip higher again, and it failed, and we rip higher again, and this time it actually took, and we continue to go. So don't be surprised if we rip higher, and then roll over and, either rip higher and keep going, or probably more likely come back up and start doing a, maybe a downward trend here. And it's still, again, it's still too early to tell. But this is not, without, let me put it this way, without some kind of positive catalyst, progress with China, the Fed going to cut rates sooner, earnings reports coming out stronger than expected. They're supposed to start reporting around the 15th. We'll start seeing some earnings. We got Costco this week, and we'll start seeing more next week, and the banks and all that kind of stuff. That'll show us the health of the economy and that kind of thing. So, any one of those things can move us in any direction. But if earnings come in bad and Fed doesn't really help us, China negotiations stall out, the trend's going to be lower, unfortunately. I have been saying for a long time that I will remain bullish until I'm proven wrong, and this has pretty much proved me wrong now. And we knew that was coming. I'm hedged, so it's not doesn't wipe me out or anything. But so my shorts are making money, my longs are losing money, so it's kind of a wash. Doesn't bother me that bad. But what concerns me more is the next step. So do we keep going down here or do we bounce? And that's the $1,000,000 question. We just don't know. But again, look at the things coming up on the horizon with earnings, with the Fed, with payrolls on Friday, with China negotiations next week. Do not get too short here, because I think we could easily get a short covering rally this way, even if it's like this. This one or this one or this one. We can get that at any time in the middle of a downturn, right? Because you rally up to, your resistance and then fail and rally up and fail and rally up and fail. So that is kind of what I'm thinking is the more likely scenario. Again, until I'm proven wrong. Otherwise, if we were to get back up to anywhere near the all-time high, I would switch back to what I was saying before 2 days ago and saying I'm going to continue to play this thing bullish. Either way, I'm going to hedge on the downside, so it won't really be dramatic or traumatic either way, right? So that's what I've got for you. I hope this helps. Be very nimble here. We always say be careful and all that kind of stuff, but be very, very nimble here, and trade light or don't trade at all. Cash is king in a market like this. So hope this helps, makes sense, and I'll see you guys at the next update. Thanks.